Welcome to the ALSET channel. I'm your host, of course, Kamar D. Jarnett. If you're new to the channel, welcome. If you're a return member, welcome back. So today I wanted to talk about the greatest showman, right? Because it appears that the EV race, is not about execution right now. It's more about, can you be the greatest showman, right? So when you look at Lucid, right? When you look at Nikola, when you look at Lordstown Motors, what you see is, at least with 2 out of 3, smoke and mirrors, right? But these companies have had and currently have massive valuations, almost at inception. And it seems like the valuation goes as high as the show that the CEO or spokesperson for that particular company can do or show.
Right now, the auto industry is on fire, especially the electric vehicle place. Hey, Tesla just added the S&P 500 last night. I'm determined to cover all ends of this business because I know you want it. So tonight I want to circle back to one that recently came public by merging with a SPAC, or Special Purpose Acquisition Company. I'm talking about Lordstown Motors, symbol RIDE, easy to remember for you home gamers, which combined with Diamond Peak Holdings on October 26. At the time, the stock was $13. Since then, it has soared to nearly $25, including a monster 26% move yesterday. Nearly 10% gain today after the company provided a very bullish business update. They're working on a fully electric pickup truck, the Lordstown Endurance, which they plan to start delivering next September. So far, they've already got roughly 50,000 non-binding reservations from commercial pickup truck fleets. However, the electric truck space, it's getting a little more competitive by the day, so how much more upside could this thing have? Let's take a closer look with Steve Burns. He's the founder, chairman, and CEO of Lordstown Motors to get a better sense of where his company's headed. Mr. Burns, welcome to Mad Money.
Hey, Jim, thanks for having me.
All right, so, Steve, first, you got a great story here. The background, it's a great American story between what happened at Lordstown and what's happening now. So why don't you tell us?
So for those who don't know us, we purchased a shuttered GM plant in Lordstown, Ohio, which is Northeast Ohio. It had been here for 53 years and shut down kind of abruptly. So a lot of pain in the area. So we were able to purchase from GM. And GM also invested in us and helped us start it and has opened up their parts bin. So they really have helped us get here quickly. So we're in a race to bring this back to life and, come out with the first electric pickup truck in the United States.
All right, so give us the value proposition for the Endurance, because it isn't exactly like every other pickup we've ever seen.
Yeah. Well, we sell to commercial fleets. That's our first customer. And like you said, we've already got 50,000 pre-orders. And when you sell to fleets, we couldn't do what most EV companies are doing, where you come out with a luxury price point and move downstream. A fleet guy would get fired for buying a luxury truck. So we had to come out on par with the gas truck's pricing. And to do that, we had to invent a new drivetrain. And that drivetrain had to be reasonably priced, but rough and tough enough. What people expect of a modern day pickup truck. I mean, they think it should be able to climb a wall and haul and tow. So we used hub motors, which are, if you think of a Lime or Bird scooter, right? Mm-hmm. There's no motor with a sprocket and a chain going to the back. The motor's in the wheel. And so we have very large versions of that. And as a result, we didn't just kind of make a pickup truck to compare to, let's say, a Ford 150. We really feel it's better on almost every metric.
And it seems as if some of these orders, the 50,000, are from Solid, a Duke Energy, a First Energy. These people are not going to be walking away. They are committed.
Right. Yeah. All of them. When you order, I think our average order size is about 500 trucks at a time. And, as most of them are signed by the CEOs of these large firms. And, bringing in 500 electric vehicles into your fleet's not trivial. So you got to plan all the charging and everything. So it's very serious orders.
Now, this is the CEO of Lordstown Motors saying that the pre-orders are very serious and they came from CEOs, okay? He's on CNBC with Kramer saying this on the air. Now, the crazy part about both companies, right, Nikola and Lordstown Motors, is that the Hindenburg a short seller firm has exposed both of them, right? So that's why I tell you in previous episodes that short selling is extremely important. It's extremely important because short selling can help the retail investor get away from scams such as Nikola and Lordstown Motors. Now, when I say scams, do your own research, of course, right? In my opinion, right? But I think with the Hindenburg information, and then when you see footage from this clip and you see what Nikola has done to Trevor Milton, once again, draw your own conclusion.
Let's be clear here. The way that you have characterized your pre-orders or reservations in the past, I mean, you called these on CNBC serious orders. Now, people would look at this and say, if you have a company that's not putting down a deposit, that doesn't have a fleet, but basically are collecting letters of interest, are those truly serious orders?
Well, no, Phil, we've always been very clear, right? These are just what they're intended to be, right? These are non-binding letter intents. They're called pre-orders out in the kind of real world. So always classified them for that, and we have a lot of those pre-orders. I think, we have pre-orders directly from fleets. We have pre-orders from people that sell to fleets because that's the way fleets buy. Fleets don't buy in general, they don't buy like consumers buy. They buy through intermediaries. And so all we've done is gone out, gauge interest, because you got a tool to build something like this in an automated fashion. We're going to build one of these every 6 minutes. We kind of have to know how to tool, and you got to know about a year in front of your building. So that's what everybody uses pre-orders for. They are always, by definition, non-binding, no money down, cancelable. I mean, that's just that's the nature of EV startups trying to gauge interest.
I understand that, Steve, but some people would look at this and say, look, you were far more aggressive in characterizing those pre-orders as true commitments, that you have company XYZ that has said, yeah, sign us up for 5,000 or 6,000. Do you regret the way you characterize those reservations?
Not some people, everyone. I mean, this guy said that these were real orders. He could have stopped Kramer at any time. He didn't. We have the footage. So now you're saying that the industry calls them pre-orders, but this is a marketing tool to gauge demand? That's not what you said on a previous interview. I think the host here is being somewhat nice, when the reality is Hindenburg exposed Lordstown Motor the same way they exposed the trolls of Nikola, right? And stop looking for the next Tesla. The next Tesla is Tesla.
Well, reservation. Phil, all I can, I don't want to get into the specifics. All I can tell you is demand is robust. We've never said we had orders. We don't have a product yet. By definition, we can't have orders, right? So when you're early and you're years away from a product, in this case, 1 year, and now we're down to 6 months. So now that we have the betas, we are starting to be able to shore some of that up. But the pre-orders did exactly what they were supposed to do, gauge interest. Nobody knew if fleets would buy an electric pickup truck, right? It was completely unknown science, no data around it. So we queried them. We have very robust interest, and that's just what they are. They're letters of interest. You can't do any more of that in this stage. So I don't think anybody thought that we had actual orders, right? That's just not the nature of this business.
I mean, it seems like this guy, he's not integrated as a person. Like as he says this stuff, his body is shaking, his eyes are blinking, like he's so conflicted, he can't even lie with conviction.
Welcome back to Squawk Box. Nikola forming a strategic partnership with General Motors this morning. Nikola Badger will be engineered and manufactured by GM. GM getting an 11% ownership stake in Nikola as a result, and the right to nominate one director to the board. Joining us right now to talk all about it is Trevor Milton, founder and executive chairman of Nikola, and Mary Barra, CEO of GM. Good morning to both of you. I'm going to start on the GM side, if I could, Mary, and try to get a sense of how you were thinking about this partnership and why you ended up deciding to do this. And then I want to get to Trevor on what it really means.
Well, thanks, Andrew. And we're very excited to be partnering with Nikola when we look at the opportunity to continue to leverage our technology, the Ultium battery platform system, as well as the Hydrotech fuel cell technology. This is a wonderful validation of our technology and then bringing our engineering and manufacturing expertise to the table.
So Trevor, I know you were looking for a manufacturing partner for quite some time. In terms of this transaction, just break it down for us. Our understanding is that GM is going to receive a $2 billion equity stake in the company. I assume that's at the valuation prior to the move this morning. And we're looking at your stock, by the way, moving 45% right now on this news. GM is up 8%. Is that right?
Yeah, I mean, look, we had 4 or 5 different OEMs we analyzed who would be the best one for Nikola to build the Badger, and GM was very unique to us because they brought a lot more than just building the Badger. The whole world was waiting for us to tell them who we were working with to build the most amazing electric pickup truck and hydrogen fuel cell pickup truck in the world, and GM was definitely the top of our list. And after I got to know Mary Moore and their whole entire team, it was just absolutely the right decision for the company to do. I mean, it's a perfect relationship. They're one of the best purchasers, manufacturers, engineering houses in the entire planet. And they're working with Nikola with all of our intellectual property, combining it with what they're doing. The Badger is truly going to be one of the most amazing vehicles ever built, and it complements their existing powertrain. So they get an 11% stake in the company. And throughout our agreement with GM, we're going to see somewhere between a $4 and $5 billion savings just in battery costs alone. So for us, it was a no-brainer, and for GM, it's a great way to help cross-utilize everything we're doing, everything they're doing. It's just really a perfect relationship without hurting each other.
Hey, Trevor, real quick, are you anticipating that GM will always be your manufacturer? Do you ever anticipate manufacturing these vehicles on your own?
No, we do not want to make our own truck lines. I mean, this is what GM's so good at. I mean, it's billions and billions of dollars. It's going to be built at their plant, engineered, validated, and tested with their team as well. So we get access to their entire supply chain, the team that has built some of the best programs in the world, the Silverados, the Hummers, I mean, everything. They've got the best of the best. And they're going to be building our trucks out of their plant. And that was the idea, is to save Nikola billions of dollars while still being able to grow with someone that doesn't conflict with our DNA.
Yeah, and to me it's fascinating, right? You got Bill Gates, with a Porsche electric vehicle. You've got Mary Barr and GM partnering with Nikola, right? Yeah, it's like people hate Elon so much that they're compromising to a certain degree, right? Just so they won't have to work with Tesla. Like, to me, it makes more, GM, why not do a deal like this with Tesla? But instead you do it with the greatest showman, or one of the greatest showmen, or a candidate for the greatest showman. And now look what you're tied to. It looks like GM didn't do their due diligence, right? It looks like GM is now in bed with a fraud, right? For what? I mean, you look at Tesla and Elon. Elon uses Microsoft. He uses Apple. He accepts Apple Pay. It's just something to said about, okay, this guy and this company is so extraordinary, but we don't want to acknowledge it. So we're going to do all of this other stuff, take all these risks that we don't need to take in order to not validate Tesla. It makes no sense to me, but this is what happens when you get lured in by the greatest showman.
Very happy to be sitting down now with the founder and CEO of Nikola. I'm still trying to work on it, guys, but I'm going to get it right. Trevor Milton and Jeff Ubben, of course, a man you've seen occasionally on CNBC, though not in some time. Chairman of Value Act, also the portfolio manager of the Value Act Spring Fund. Guys, thank you both for being with us. Trevor, let's start with the transaction that has brought you to this desk this morning, which is, of course, SPAC, Stephen Gursky's SPAC, Vecto IQ does the deal to acquire you guys, essentially, or merge with you. What does this allow your company to do as you pursue, of course, the future in fuel cells and trucks that are going to run on them?
Yeah, so the market around the world never, like as of right now, is probably the most active market around going clean. So fleets around the world are trying to migrate away from the diesels to the clean energy, zero emission trucks. We needed a method to get to the market, to get publicly traded quickly. And that's really what the SPAC was there for. It helped us get to market in less than 6 months, saved us a bunch of time. And we got to bring in a great board member like Steve Gursky into our board. That was really our main goal, is how do we build as many trucks as we can? We'll be sold out for quite a few years, so we needed access to the markets as fast as we could.
And what is it going to allow you to do? Obviously, you've brought in additional capital as well. That's one reason why Jeff's here, has been involved with the company for some time. But Pete Schoenfeld, the other name Fidelity, I believe, Fidelity, as well. What is that additional capital going to allow you guys to do?
So we'll end up with about $1 billion total. So there was about $500 million from the PIPE, another couple $100 million from the SPAC, and then another some more money that came in prior to that as well. That's going to help us build our factory. We break ground on the factory just here in a couple months. We're going to be building about 35 to 50,000 trucks out of that factory.
Where's that factory going to be?
It's in Phoenix, Arizona. So we really just needed to expedite the factory build. Right now, our partner in Europe, Iveco, which is Case New Holland Iveco, we did a joint venture with them just recently for Europe, and they're going to be building our trucks out of Europe, shipping them here until our factory's up and running. So the quicker we can get our factory here going, the better off it is for everybody.
You know, one thing, David, that Trevor and I talked about was to get public early rather than to go public late when you have all this VC money that's marked the stock up, and to let the small guy, the retail investor, participate in the growth of this company in the industry, and also bring discipline to the company, as opposed to having money come in and stay private, which has proven to generate some bad decisions.
A lot of times the highest rate of growth is actually occurs while the companies are private, as opposed to being exposed to the public markets. Right. In this case, Jeff, I would think, though, this has a spark for the retail investor, given their interest right now in plays in terms of energy efficiency, ESG, and everything else. I mean, my sense would be that it can catch on in that way. Is that another reason why you're happy to have it on the public market?
It's the only hydrogen energy company that's pure play listed in the world, right?
Yeah, besides... Yeah, exactly. I mean, really, when it comes to automotive related, we're really the only hydrogen, zero emission, battery electric, heavy duty truck manufacturer in the world. So the SPAC had incredible results yesterday. So for me, I was really happy. It's more of a retail play than it is the huge institutions.
Right, as people understand it. And yes, to your point, the SPAC was up significantly on the announcement of the deal. Why are you, I mean, you know, it's funny, you and I have talked about ESG. You were early, of course, with the Spring Fund and sort of seeing the ability there to gather assets, I would guess, around a new investment focus, Jeff. And you mentioned this company to me almost a year ago when we sat down, very briefly. But what is it about this company that attracts you and Value Act?
I mean, the Spring Fund, we're about additionality. And when you're dealing with public companies, your additionality is to change the corporate strategy and trajectory of the company and reallocate capital to cleaner, healthier solutions. With the private companies, our additionality is capital, primary capital, to grow, but also partnering with mission-driven, brilliant CEOs that have a clean piece of paper, they're uncompromised, and can run to the goal, basically.
You characterize the company as a merchant energy storage company with de-risking offtake. What does that even mean?
Well, if you think about a lot of, even the storage business today is you get a PPA with the utility or maybe a commercial customer, and it's an asset-driven business that generates a fairly low return, 7, 8, 9%, because it's contracted. In this particular case, Trevor solved the chicken and the egg, and so storage is a threshold technology, and storage is where the value is going to be created, because you can take intermittent energy from the grid when it's free, put it into a hydrogen tank, and then sell it in the middle of the night to a truck. So that's the margin in this business, is the fuel. But he's de-risked it because he has an offtake in a way, which is his trucks on order.
The fact that he knows he's got a user of that energy.
Right. So we've got this uncapped return, but he's de-risked it because of the business model that he came up with.
So what was the key advance here that you feel you've made? I would assume it has to do with the fuel cells themselves.
No, it's actually the chicken and the egg. It's very similar to Amazon. The reason why Amazon's been so successful around the world is that they cover not just the goods sold online. I mean, anyone can do that. But it's the entire logistics behind it, the vertical integration. It's very similar to what Nikola's done. What we've done is we don't just sell a truck. We're really a tech energy company is what we are. We actually sell all the energy for the truck to the consumer at the same time. So these hydrogen stations are expensive to build. But if you match them up to truck orders, then you're only dedicating around $30,000 per truck to a station. So that's nothing. BP, when BP or Shell, when you sell a truck, they get about somewhere right around about $1 million in revenue in oil revenues every truck that you ever sell in diesel. So what we did is we took that money, we brought it into Nikola now. So we sell the truck, we're an energy as a provider kind of solution. And that's really the difference, is very similar to Amazon, is we've got the whole ecosystem rather than just selling a truck.
So you're going to be working, I would assume, though, on long-haul fleets at first. That would seem to make the most sense, wouldn't it, in terms of where you're going to put these things and how you're going to twin it with the trucks and the companies that operate them?
Yeah, so that's probably one last thing that's really unique about Nikola is we're the only company in the world that offers both battery electric trucks and hydrogen electric trucks. So battery electric trucks work really good up to 300 miles. They're awesome. They're cheap to run. They're way cheaper than diesel, and they're even cheaper than hydrogen in some cases. Then hydrogen above 300 miles, when you're moving freight, it's the only way to go because it's cheaper to run than battery because you don't have all the weight of the batteries where you're losing payload. So Nikola is the only company that offers both, and that's really what sets us apart is we offer both battery electric and hydrogen electric, and then we do the grid buffering, so we help the grids buffer their grids. And that's how we get our energy so cheap to be able to broker back to the fleets.
So when are we going to be seeing your trucks on the road fueling at your stations?
So we've got the largest hydrogen station in the Western world already operational in Phoenix, Arizona. That was like our big test facility to show it all works. We're rolling out 5 stations, kicking off 5 stations this year right now. And next year, you'll see our trucks coming off the assembly line, first to second quarter. That's why we went public. We decided, okay, we got to get to the capital markets. And the stations will be built and filling next year as well. So we're less than 12 months out.
You've got a lot of partnerships as well, don't you, Trevor? I mean, I see here you've got a partnership with Bosch for your vehicle battery systems and fuel cells, and Meritor on suspensions, Wabco on brakes, thermal. You've got, I mean, a lot of partners. So how much of the intellectual property is actually yours and not theirs?
So this is something that we took a way different approach than Tesla. Tesla, by the way, has done an incredible job. They've gathered the whole world to follow behind them, and that's kind of what Nikola has done around the trucking world. We have the same type of following of people that just love us. It really is a retail play.
And he's literally telling you, and this is 2 or 3 instances, it's a retail play, right? So to me, this is one of those situations when some of the people say we've got to protect the retail investor, right? This might be the type of stuff that you want to protect them from, but at the end of the day, you've got to do your own research. Like, that's why people like Hindenburg help. But there's no protection in the market. Either you win or you lose. But things like this, if you continue to watch Trevor Milton, we just saw him say, production, they're building a factory. Then we just heard him say, we'll never produce. That was never our plan, right? So you've got to be able to notice these contradictions and start to try to figure out, is this a person and an organization that I want to invest in? We help the grids buffer their grids to get the energy back. And this is why we're able to do it so cheap. But they've done nothing. They've literally done nothing but show you pictures and have the greatest showman talk to you.
It is the new hot electric vehicle stock, Nikola, roaring higher. It is now up 96% since its June 4th debut. At one point last week, it had a market cap bigger than that of Ford Motor. Joining us now is Trevor Milton, founder and executive chairman of Nikola Motors. Trevor, great to have you with us.
Thanks for having me, for sure.
I wanted to ask you about this crazy roller coaster ride for your stock, and it's a roller coaster only going up, it seems, so far. But you're a company right now with a market value that is approximately 8 times the revenue that you're projected to make in 2024. Do you have any comment on the valuation of your stock?
Yeah, I mean, I think the world's changed a lot in the last year. You saw the coronavirus hit the whole world, and one of the major issues they had was respiratory problems. Actually, was a greater effect on the virus itself with people. So investors are rewarding people out there right now that are changing the world, reducing emissions. And I think Nikola's a unique company because we're targeting the second largest polluting industry in the world, the trucking industry.
Did you see the pivot to link the answer to the coronavirus the pandemic and respiratory issues, you link that to sustainable energy and clean air. Now, I can't say that Lucid has anything in common with Fraudstown Motors or Nikola. I can't say that, right? I don't know. Right now, it seems like, they've actually got a car. They've got a factory. They're giving more, realistic projections, right? I think one of the guys is from Tesla. But I just caution you that Tesla's about execution, and a lot of these people are getting over simply on having the greatest showman present his case. And that's one of the realities that I see. You may agree, you may disagree. And if you've got stock in any of these companies, I wish you the best. I definitely would wish you the best. But I'm just saying that beware if all they're doing is promoting the greatest showman.
We are talking about Lucid Motors here. The IPO SPAC that has got everyone talking about. Lucid down 40% as I'm making this episode. We are going to share my screen here so y'all can check this out. I wanted to go live at the close. We have 3 minutes left in the market just to watch what happens here. This is sort of history in the making. Lucid, I kind of want to give a little bit of background for those who don't know about Lucid, because this is a really interesting situation. So, the SPAC boom, we all know what's happening with the SPAC boom, which is companies are using these shell corporations, reverse merging with them. It's sort of like a hack on the IPO process. And so a much cheaper, faster way to IPO. It's caused this massive IPO boom. So as a part of that, and especially the interest in electric vehicles and Tesla, we've seen so many companies try and take advantage of this. So many startups like Lucid, who just 2 years ago were struggling to find any investors or even keep the lights on, and are now at a value of $60 billion, despite the fact they haven't even delivered a single car. So this is a pretty unprecedented time. This is called Churchill Capital Corp 4. They haven't even changed the name to Lucid, but this is the company that on yesterday actually was officially announced that Lucid would be partnering with them. So I want to break down what happened here, because originally we started with the stock here at $10. So that's what the company was trading at, the shell stock. And then as rumors started coming out from Reuters and Bloomberg that a deal was going to happen, the stock started rising rapidly. And so that's what we saw here. And investors were speculating. And this is what I kind of wanted to give people a little bit note of caution about, because people were speculating on this stock without knowing the valuation. Like, are you really going to buy a stock without knowing how many shares are outstanding? Like, I think this is such an important piece of understanding stocks in the market, is when you buy a stock, you're buying into a company. And when you buy a stock, like, the valuation of that company is determined by the price per share times the amount of shares, which sounds super simple. But to everyone investing in Lucid, I would beg them to know, do you know what the outstanding share count is of Lucid? Do you know what valuation you're buying in at? Because the crux of that question is why we had a massive crash. So leading up into all of this hype with, oh my God, Lucid's going to IPO. It's going to be the next Tesla. It's going to be worth $50 billion. Everyone's freaking out. Nobody's doing any homework on the valuation. Nothing officials come out. The stock runs up here to $50. And so now we have this shell company, which is literally nothing, worth billions of dollars for no reason other than people will think it will merge with Lucid. Then the deal gets announced. So now I'll pull up the official deal that got announced here. But the deal gets announced on Monday, and it's a huge letdown because the valuation, they did a huge funding round at $15 per share, and that valuation was $24 billion. So here's the official press release that came out yesterday, and they talk about, we're going to, our vision to redefine luxury, performance, and efficiency in the sustainable electric vehicle market. So we have Lucid here, talks about the details of this deal. It's at $11.75 billion transaction value, but then they're also raising $2.1 billion in cash from CCIV, which is the Shell Corp, and $2.5 billion fully committed PIPE, which is a secondary offering. So they're not only going public here, but they're raising an insane amount of capital. They actually ended up with $4 billion of capital. And this is the largest ever SPAC-related PIPE, which is pretty epic. They're saying they already have 2,000 people expanding to expand to $3 billion. So this all looks great. But the important thing to understand here is with an implied pro forma equity value of $24 billion. So Lucid Motors at $15 per share is worth $24 billion. And so that's why when this thing was trading here at 50, everyone's like, wait, if it's 24 billion at 15, when it's at 50 or 65 bucks, this is like a 60 or 70 billion dollar company. That's right. Lucid was trading for 60 or 70 billion dollars yesterday at this announced price. That's why today it crashed. And if you look at the stock today, as we're heading into the close here, it's down 38% to 35 bucks, but 35 is still more than double 15. So we're still trading out a 55 to 60 billion dollar valuation for Lucid right here at 35.21. And so remember what I said, the outstanding share count is the most important thing that matters. So this is Lucid's 70-page investor presentation they put out, which we're going to go through and I'm going to analyze here. But the most important, honestly, none of this matters to me except this number here at the bottom where they talk about the actual mechanics of the deal. I think it's literally one of the last slides here, but the mechanics of the deal here where they say they have 1.6, oh, sorry, I thought I was sharing. They have 1.6 billion shares outstanding. So this is the number to look at. And this is the slide that I would spend a lot of time on if you were a Lucid investor, because this is the mechanics of the deal. How it's actually working is there will be 1.6 billion shares outstanding when this is all said and done. So 1.6 billion times 35, that's how we're getting to that 55 or 60 billion number for the valuation. So I think this is probably one of the most ludicrous valuations I've ever seen, and I think, so Tesla succeeded, and I think everyone's taken it for granted how good of a business this is. And I've said this before on the channel, but it's just, I can't reiterate how crappy of a business building a car from scratch is. It's literally like takes the most billions of dollars of upfront and then you get this micro incremental return. It's an extremely capital intensive business. That's the reason why Ford, GM, Toyota, all of these automotive companies before Tesla were trading at a fraction of 1 times price sales. They're trading like 0.5 times price sales for like a 100 billion in revenue. They're only trading at a $50 billion market cap because it's such a low margin, crappy business. And so I think that's always important to remember when you're thinking of vehicle companies. But Lucid literally hasn't even delivered a single car and it's worth 60 billion, which is worth as much as Tesla was, and they were delivering 100,000 cars. So I know we all kind of know how irrational this has gotten, but I think this is truly like gambling, not investing. This is trading, not investing. Nobody's investing in Lucid at this price. And that's why I kind of, the crux of this video is my take on all of this is Lucid actually doesn't sell cars. They sell their own stock. That is the product. When they were running ads for the Super Bowl and for all these football games, it wasn't to sell you their car. No, it was to sell you their stock and their IPO. They just sold 4.5 billion worth of stock. It's going to take them 3 years to sell that many cars, even by their ridiculous optimistic financial projections. To me, this is an entirely, Lucid Motors just 2 years ago was on the cusp of bankruptcy and got $1 billion essentially bailout from the Saudi Arabia private wealth fund. So when you think about, Elon Musk and Tesla, this is a guy who owns 40% of the company, is motivated by a huge stock option package to take it all the way, to innovate. That's who's behind Tesla, this real, Silicon Valley innovation entrepreneur inventor, Elon. But when you think about who's behind Lucid, it's a company that almost went bankrupt, that got kind of a washed up Tesla guy, Peter Rawlinson, to raise money from the Saudis to try and do something. So I don't know. I don't see as much of one of my favorite metrics in investing is like give a shit factor. And I was looking for their SEC filings to figure out what is the salary that Peter Rawlinson makes, how much equity does he have in the company versus how much is he actually getting paid. That'd be something I would look into immediately.
And that's why the stock plummeted, because it went from like a $10 billion valuation to a $50-60 billion valuation. And once people realized that that's what they had bought into, they jumped out, right? So once again, have no idea if they have anything in common with Lordstown Motors or Nikola. But I'm just saying, be careful of chasing the next Tesla. These numbers seem extraordinary. Profitability seems to come at a much quicker pace than it did for Tesla. Now remember, NIO's not even profitable yet, okay? So, think about this, when you invest your money. Once again, not stock advice, but I'm just saying, are you investing in the greatest showman? Or are you investing in execution, fundamentals? Are you investing in a leader that has said that my fortune is dedicated to 2 things: to accelerate the transition to sustainable energy on the planet, and number 2, to make humankind a multi-planetary species. And not only has said that, but we're watching Elon Musk actually do it.
From the very beginning, we wanted Lucid to explore what an entirely new luxury experience could be. Not bound by legacy technologies like the internal combustion engine, and not bound by the tradition of the automobile. That way, we could really focus on the future. We could take a new look at cutting-edge technologies we feel will expand the luxury experience and how we think about mobility. We focused on how we could transform the space both inside the vehicle as well as the space the vehicle takes up in the world around us.
The inspiration for the Lucid Air was drawn from the travel experience of an executive jet, and the key enabler for that is the miniaturization of the electric powertrain. A traditional car has much of its space occupied by the internal combustion engine. If you replace those traditional components with an electric driveline and batteries, you can open up a lot more space for the occupants. You can effectively reduce the height and the length of the vehicle whilst increasing the interior space. The consequence is a product which is truly disruptive in its nature, spanning a whole range of traditional products. No longer has the customer to choose between a traditional segment. The customer can have optimal experience in a single vehicle. With a significantly smaller exterior footprint, the Lucid Air offers even greater interior space than competitors' largest class-leading sedans. The Lucid Air is a vehicle without compromise, one that has incredible performance, dynamic and emotional styling, yet still offers enough space and comfort for a sublime luxury experience.
I mean, extraordinary. I mean, it makes you think of Lexus when Lexus first came out, right? You couldn't hear anything outside of the vehicle. Extraordinary, okay? And me and a lot of my family, closest friends, when we talk about Tesla, the EV market and stocks, I remember my cousin, when he sent me Lucid for the first time, he said that if Apple designed a car, it would be the Lucid. And I truly believe that the only chance for Lucid is to merge with Apple. But once again, the Apple car is here already. It's called a Tesla. Everybody else is just playing catch up. And while they're focusing on just making the car, Tesla's focused on batteries, autonomy, insurance. So yes, it's about execution, it's about implementation. But I'm just saying, beware of the greatest showman.